Um, Thanks everyone. Thanks for coming tonight. And I know it's a late night session and a busy day. So I'll try to provide as much value as possible from this session. The topic that we are going to talk about today is how to fast track your property investment journey. And this webinar is particularly designed for the construction business owners, builders, and developers. But the same principle behind this also can be applicable to other professionals. So what we're going to do in this session is that we're not going to sell any product or service. So you're not going to hear any market report, hotspot, or what you should be buying. Um, we're not going to do any of that. This is a purely just a knowledge sharing session. Principle based on my understanding about how the investment property works, and I'll link the principles back to the construction industries. And I'll also provide a few practical tips for you to take home and that you are able to use it to start strengthening your investment capacity. Before we dive into this topic, I need to make a disclaimer here that this is a general advice only. We haven't considered your particular circumstance, and please do not consider this advice without consulting your advisor. Um, so without further ado, let's dive into this session. Um, First of all, uh, I want to talk about why do we invest in the properties as a construction business owners. My following comments is going to be a little bit offensive to many people, but what I actually believe is it's very hard to create wealth working in the construction industry. And here is my reason why. Right. Despite the construction industry has a very high risk, let's say that you are a very good operator, you do successful project. Next is the market is going to it will award you with bigger projects and more projects. And that means you would need to spend more money back into the business. So your profit is going to have to stay in the business to support its growth. Right? So the more success that you have, the more similar kind of reward you get. By the end of the day, it's almost going to become similar to the famous TV show Do or No Do, right? I'm not of risk. It's the same, and I know that you have a lot more control in the business. What I'm saying here is there's always going to be a strong incentive for you to go higher, go more. And sometimes we go so far that we forget about this industry's high risk industry projects for many years, but you really just need one or two projects to go wrong, your profit years, right? And what is the chance for us to have one or two bad projects in our business? That chance is actually very, very high. So from time to time that I do see very hard working entrepreneurs in the construction business, they actually don't have much for themselves. Right? They're working very hard but having the entrepreneurial poverty. So that's why I see it's very hard to build wealth in the construction business. We don't have to change a business or change our career. We just need to run our business at the same time that we also become investor on a portfolio. And for most of you, this means a property portfolio and maintain it and grow it. And eventually, this portfolio is going to provide you a passive income to meet your lifestyle, and that's your financial freedom. That means that you are going to be less financially dependent on your business, and you are going to be able to spend more time with your family and knowing their financial future is powered by your portfolio. And you're going to have less stress from the business. And with less stress, you make better decisions. And you also don't have to chase for the low margin jobs that not actually giving you a good return, right? So that's why it is important for construction business owners also become investors at the same time. So now let's look at the internal journey an investor would go through from a beginner to expert. Um, I observe there are four different stages that an investor will go through. The first stage at the bottom, I call it happy old days. Right. At this stage that we're not actually an investor, that we're not actually worrying about our financial future. We spend most of our earnings, and we enjoy the day. Right. And that's why it's a happy days. The problem with that is it doesn't build a good financial future stage for too long. We definitely would have a miserable retirement life, and we definitely would not be able to build up the capacity to support our family when they need it. So I think, like at some stage, most of us would grow up from that level. For me, it was come to my realization when I get engaged. But for other people, for you, it might be when you have the first kid, or when someone in your family or some of your friends need financial assistance, or any other thing. But most of us grow to the second level, which I call a realization and a frustration. At this stage, we become realized of what we need to do to create a better financial future. We need to become investor, have a number for what that future may looks like. Oh, that's it. Next is frustration. I'm frustrated because we start saying our dream and the reality. We know where we want to be, but we have no idea how we can get there. And what's more frustrating is that at this stage, everyone start giving you may have some advice, do the investment, may have some advice, my friends, my club, that some advice, right? And I don't know what is right and what is wrong. And without enough knowledge and not understand the principle of investment fortune, good start to get into the second stage, but too long. What we of the investment third stage? Not quite a professional investor yet, but we have learned the principle through our study and through our practice about how to build the investment portfolio. And we also understand what is our strengths and weakness. And we will be able to follow the right principle to keep improving our performance. And once we get to a balanced capacity on our investment, we then move to the next stage, which is we are able to fast track our financial freedom in the investment. So these are the four stages that I have identified for an investor to grow from a beginner to expert. And in the next 10 minutes, I'm going to focus on the second stage, which is realization and frustration. I'm going to talk about some uniform system that a lot of professional investors use for their investment, the construction business. So, um, the I have been attend a lot of the system. They might have different terminology for different stage, but basically they're using the system to create their wealth in the properties. So the first stage is called accumulation. At this stage, we will leverage our borrowing capacity and cash reserve to acquire properties to build our property portfolios. And go to the second stage, which is called maintenance. During this stage, our properties to improve the value of the portfolio. So there are two major forces during this stage market in the past decades that the Australian property market in the major capital cities has been keep increasing in value, right? But we also got a second force here. We proactively map value onto it. For example, we can do the renovations, or we can do the subdivide um, to increase the property portfolio value. So once the value of our portfolio grew to the certain level, then we are able to move into the third stage, which is called consolidation. This stage, what people do is they start selling some portfolios, realize the capital gains, and they using the capital gains on the remaining have is a mortgage-free property portfolios that generate passive incomes to meet our lifestyle, and that is called our financial freedom. So this is the three-stage system that a lot of professional investors follow to create their wealth in the property. And now I want to look at the strengths and weaknesses owner had in this game. So to identify strengths, the strength is very obvious. Like construction business owners have the capacity to uplift the property value faster and cheaper than the normal mom-dad investors. So what this means is what may take a normal investor 15 to 20 years to grow their portfolio to the consolidation stage, a construction business owner may only need to take 5 to 10 years. That means they can fast track their investment journey. They can achieve the financial freedom earlier. They can enjoy their life earlier, which is great. However, it is equally important for us to realize what is our weakness in this game. So I have listed three roadblocks here. The first roadblock, I call it borrowing capacity. So most of the construction business owners do not have very good borrowing capacity. This is mainly because like the construction business is not favorite case for the lender. That's the first reason, and business owner cannot show income, which borrowing capacity. It is all about game. So if you cannot leverage enough, then we're not going to go too far in this property investment. And the second challenge here is a cash reserve. In the property, many opportunities that you can leverage 100% on investment. So you have our cash reserve to put in. I mentioned previously that most of the times the business owner are tied up in business. So the resource they can put into a property investment, and that become another restriction. And that also leads to two serious results. That a lot of times when I see a construction business owner consider about doing the property investment, they face two choices. One is called project farming. The other one is called owner eat last. So project farming means that we will take whatever cash that we have in the business, despite some of the money need to be preserved to pay for the upcoming bills. And we put that into our investment and hoping that somehow we can miraculously solve this problem down the track, and we can repay everyone shortly. And after business long enough, we know this is a perfect formula for the insolvency in a couple years' time. And on the other hand, the owner eat last. I do have owners like coming to me and they say like, I'm only going to do the investment when I see my business build enough cash reserve. However, for the same reason, the owner who eat last thing to eat. And that's the reality that we face. So both scenario is not going to give you a sustainable journey for your property investment and challenge. And here is knowledge we don't know. The fact is, construction business owners are not naturally born as good investors. We do not know where to invest, what to invest, popular. Same struggle investors are facing. However, to solve this problem by spending tons of times doing the research by themselves, They follow the professional investors YouTube channel, read the market. They spend a lot of times, so they're catching up on this knowledge that they didn't have. However, as a construction business owner, one does not have time. So the lack of time means that you cannot spend too much time learning, doing the research by yourself, and that becomes your competitive disadvantage. Right, so that's the three roadblocks that we identified for to the progress here. That what we will notice is strengths for the construction business owner in the property is actually fall on the second stage that we can quickly lift up the property value. However, all the challenge that we face are actually in the first stage, which is accumulation. The problem is we are not able to utilize our strengths without past accumulation phase, right? So that means that our strength is not going to offset our weakness in the property investment. Fast track your property investment journey, that we have to find the weakness that we have, right? So what are the solutions? I'm going to go through each of the challenge one by one, and I'm going to share some practical tips that we have in our clients. So first, the borrowing capacity. Strategy is your income. I'm not talking about need to chase for higher revenue for your business. We're gonna be focused on before the growth, right? What it really matters is your bottom line profit. And you need to have a business that is generating enough profit to meet your borrowing capacity. How do we do that? Our client is we actually first is to understand what bottom line figure that you need. Let's say after working out your personal budget and your borrowing need, that magic number is about 20K per month. And you do have a business that you designed for 5% net profit, right? So if we work retrospectively, then we will need to bring at least $400,000 revenue into your bank account. Deliver that result, your magic number. But the problem here is the module that we just introduced is by design. How do we know that in the reality that we will be able to achieve the result that we designed? I'm pretty sure all of you all had is not quite delivering the designed result, right? And it doesn't matter how much margin that we put in the project, as long as we couldn't achieve that result, that number is becoming meaningless. So this is when it is important for project and so what our client does, they would on every month they will tracking on their project, understand what is their project to date cost, and looking at what is their project to go cost and income, and understand when the money is going to come in and go out of the business in details. The confidence on the right track, they are going to deliver the result, identify the problem earlier before it's too late. Can save tons of energy and frustration fighting with their client, fighting with their employee, fighting with their trades, not doing this and only realize the problem when it's too late to fix. So how do you achieve this result? First of all, you need to have a good project management system, right? A software. All our project budget into the budget schedule on the timeline basis. And third, you need a good bookkeeper to help you to track all the records. And then you need to spend 30 minutes per project per month to understand all the numbers. That's all you need to do in order to uh, protect your bottom line profit, right? So that's our first strategy to increase your borrowing capacity. And our second tip on improving borrower capacity is be smart, doing the smart borrowing strategies. There are many strategies out there, but one thing that is becoming popular here is using the self-managed super fund. So your self-managed super fund has its own borrowing capacity. If we are able to accumulate enough funding in the super fund, we actually can use the self-managed super fund to do the property investment, even if you have reached the cap on your personal borrowing capacity. So this is the second tip that we want to share on the borrowing capacity. Now let's look at the cash reserve. Traditionally, the investors would need to wait for the property to increase in value in order to get more money out of their equity revaluation and using that money to do the next investment. The problem with that is it's 100% dependent on the market. And it's going to take a couple years before you can get that equity out. And it's going to extend your investment journey for extra long. So what we do for our client is we actually ask them to create a cash reserve for investment through their business. The principle that we follow here is called profit first. The technology is very simple. Every time your client, we are going to put the profit percentage away into a cash reserve account. And every couple months, normally it's every 3 months, that we will transfer the money in the cash reserve account into our personal investment reserve account, and that become your investment money, right? So some system like is confusing, right? That if I already struggle with my cash management, how would I be able to manage my business if I start taking money away from it, right? So here is my reasoning. Let's go back to estimation. When we do the project estimation, I believe no one would say that I design my project so tight, so I shouldn't be making any money there. And we all have a number for our net profit. Do we not say coming out of the business and deliver to us? Again, this one goes back to that I mentioned adding the business. So the the way that we can solve this issue is when you work hard and you make a profit, get profit away. And if everything else goes by your design, you should with the remaining money. The fact is, if you don't put your profit away, your money will find a meaning by itself. And that meaning may be a luxury car that you not really needed. It may be some extra cost on the project that you shouldn't be torn to. It can be a subscription you have forgot that you have for years, right? And every time you lose your profit. So instead of putting money in the business and let it waste it, I would suggest my client to put the profit away. And if they can do this, and they can create so much positive energy in their business more efficiently, more resilient, and become a cash generator for. So next, what I want to do is I want to do a quick calculation and show you how this system works, how we design this system for our client, impact it really have on your investment. So this is the demo data. Assuming that we have a business over of 5 million, designed to have 5% net profit. Business, this is the basis that we will see that we have an average $416,000 income coming into the business. And we will distribute 5% to the GST, 80% to the direct cost, leave 5% in the profit, pay 1.25% income tax, and give 8.75% to the operating cost and other things. So by the end of the day, we are going to have $250,000 sitting in our reserve account, which has already been transferred to the personal investment reserve. And the best part here is the money you transferred out already got tax. Have to put money out of your $250,000 distribution and pay back to tax office. The business even managed the tax payment for you. And what that $250,000 means to your investment. If we're talking about a residential investment, that means $1 million property that you can purchase per year. And for most of the investors, that if you can purchase $1 million property once a year and doing it every year, that's a pretty good result already. But now let's go a little bit more creative. Let's say that we don't go for $1 million property, we go for a $600,000 property. Rule of thumb that we need 25%, so we spend $150,000 from this 250 to purchase the property, and we still have $100,000 left in the profit reserve. That $100,000 can then be spent on for that property, right? And the rule for the renovation, if you are a contractor or builder, that every dollar that you spend should generate $2 in return, minimum. So that 100 put another $200,000 on your property value. Now your property is going to be $800,000 value. Toward the finish, let's call the whole project go to refinance another $160,000 out of your additional $200,000 equity. And that means that $160,000 coming back to your profit reserve. Else change that we are going to continuing accumulate profit from the business. So that means you get another $80,000 profit reserve from the business. Now, 4 months after you bought your first investment property, you got another $240,000 in your investment reserve. The question is that going to take long for you to buy the next property? Probably not. So that's how powerful this profit first distribution is when it comes to your wealth creation. It can completely solve your introduced cash reserve creation, which is through the property value. Upon point of here is instead of borrowing money from the bank to do your property improvement, what we want to do here is we're trying to use as much from the business, from our profit reserve improvement to over leverage, are able to equity out of the 2 tips is what we want to share. How do we improve the cash reserve? The knowledge. What's good here is that we are actually in information age, and for most of the questions that we might have, that there is an answer, and hopefully that I have demonstrated a good example today that how you can gain knowledge without having to spend day and night doing your own research, right? However, that we can have the knowledge of the word, but if we do practice, this knowledge is not going to do anything good for us. And actually, without practice, the more knowledge that we have, tools we will get. Because quite often there are conflicting theory out there, and without practice, you don't know which one is right, which one is wrong. So what I would suggest here is let's get practical. Like, for example, tonight that I've introduced a few different practical things that you can use to strengthen your investment capacity. Um, Maybe pick up one or two that you like and start practicing. Once you start practicing, then you know what is working for you, what is not, and you can continue practice what is working and find ways to improve on what is not. And if you can consistently practice with time, that you are going to see a transition investment capacity, right? And the thing that I want to mention about knowledge here is it is important to realize what is our time mostly valued for. Uh, for me, beside some time with family, my time is mostly valued when I spend it on my business, so I can earn most of the money. And I personally would rather using uh, would rather using uh, a property buyer agent to do the market because they got a better data system, they got more experience than me, they got better knowledge, and what I need to do is only leverage my time to earn more money so I can pay them and borrowing their brain to create a better result for me. Called knowing who, not how. It's always easier to know who can do the job rather than how to do the job. So my point here is your network of professionals is important, right? It is super critical to surround yourself with uh, the true professionals who know and who have done the investment by themselves that can help you to achieve your success, right? And if you uh, need any professional advice, you can feel free to you can feel free to reach out to me. So basically, that will be the three that these are my solutions for the three uh, weakness that we had in the property investment. To about important for the business owner to also become investor in the property. And we're talking about journey investor will go through from beginner to expert. And we talked about the uniform three stage for the property investment. And we talked about advantage and disadvantage of construction business owner may have in the property investment. And we talked about some practical solutions for how to improve our investment capacities. So that's all I would like to share for today. And if there's any questions, uh, yeah, you have any questions? Yeah, that's actually a very good question. The way that I will manage the discipline on that is actually following the budget, right? So I would like to bring you back to um, the chart that we created here. See, when we do the distribution, that we actually not distribute based on the amount, we distribute based on the percentage. And the same principle would be applicable when we manage our personal budget. So the first thing that we need to do is work out the budget. When it comes to manage personal money, we need to work out the personal budget category and work out the percentage that we need when the distribution happens. We'll just follow the percentage distribution. the distribution is bank accounts. More details here. A particular expense from that particular account. For example, I might have, and that might be 10% of my income account, and might have a travel account. And then my travel budget is limited to how much money that I will have in that account. So this is how we create discipline by literally putting money into different box, right? Like what in the old days before we have net banking, that my grandparents they would put money into different envelopes. This is going back to the old practice because you give every dollar a meaning, so they don't find the meaning themselves. So this would be my way to keep discipline. Thanks, Ian. And well, thanks for everyone who webinar and talk about any of your particular scenario. If you want to um, have a strategy built for you, that please feel free to reach out to me by email. I also put my LinkedIn details here. Feel free to send me a message. I'm more than happy to have a chat with you, and we can work through your particular scenario and create a tailored strategy for you. And thanks again for attending tonight, and have a good evening.